All right, welcome back to another episode of the Tim and Tim Show every Tuesday at 10 a.m. Eastern Time with your favorite hosts. Surprise, surprise, our names are Tim and Tim. Nice to see you guys again. Always a blast doing the show, and hope that you are either watching it live or watching it later as a recording and have some input. So we always ask for your feedback and comments. Please make sure you put some comments in the Facebook feed so that we can answer them and provide some more discussion and insight. Anyways, Tim Best, how you doing today, buddy?
Not too bad. I couldn't be better. Can't complain. What
Can't
do I usually
complain.
say?
Yeah.
Hey, you know what? I had a nice little bonus this morning. Tim and Tim show. One of my neighbors somewhere else in the neighborhood watches our show. He reached out to me, wanted to chat about multifamily. He's like,
Oh,
I
interesting.
was like, there's three of you. Cool.
Yeah, man, you never know. I mean, there's so many people that watch it. Like, I run into random people and they're like, dude, I love your show. I'm like, you watch it? And they're like, yeah, it comes up all the time. I'm like,
Yeah.
wow, I'm actually impressed. I mean, we sometimes, truth be told, we probably usually get somewhere between 5 and 15 people watching live and contributing and kind of engaging. Most of the viewership comes later and they watch it on their own time,
Right.
which is perfectly fine. But that's why a lot of people are like, Tim, you got to make this into a podcast. You have 3 years worth of podcast episodes. All you need to do is post them onto, what is it, Apple or, whatever podcast. They're like, you could create a great podcast. I'm like,
Dude, Joe Rogan, you're going down. You're going down.
yeah, right. We just need to get some high ticket celebs on here to chat with us.
Yeah.
So, all right, this week we're talking about why strong asset management wins even when the markets don't. This is it's a subject everybody's talking about right now. I mean, it's relevant in good markets and it's even more relevant in bad markets. One of the conversations I've recently had with an investor is talking about holding me accountable to things that I can and cannot control. Those that I cannot control are, typically things like taxes, insurance, and utility usage rates. All other things are generally under our generally, I say generally, under our control. And it's like, hold me accountable to where I told you I would get a rent roll to, or hold me accountable to what I told you our gross income was going to be. And that doesn't necessarily always mean it's correct to the penny, but it's generally pretty close, right?
Yeah.
And it can be difficult because when you're underwriting a deal, you are thinking about so many different moving parts at the same time. You're thinking about asset management, you're thinking about value, you're thinking about cash flow, you're thinking about market cap rates and what they're going to do. You're thinking about debt and debt interest rates and what they're going to do. You're thinking about investor related returns and what their expectations are. And I have to say, you move one thing and there are 8 other things that move along the way. And there's a
Yeah.
lot of just a ton of moving parts in underwriting a deal. And that's why you have to think strategically when you're doing asset management as well, because every decision that you make will ultimately end up impacting somewhere down the line. There will be a downstream impact on a downstream impact on your decision, right? And it might not rear its head immediately, but it will eventually, right? So asset management is tough, right? One of the core things that we believe is important in asset management is showing up on site at the property regularly. Regularly can look like a lot of different things to a lot of different people. However, just know real estate takes time, right? And showing up on the property even once a month could be a lot more. I mean, that could be 12 times more than, or 11 times more than the other guy that shows up once a year.
Yeah. Yeah, for sure.
It's interesting. Maybe it's not interesting. It's a different perspective when you show up on a property and you own it versus when you work at it every day and you manage it, right?
Yeah.
And ownership's perspective on an asset that they own is going to look different. They're paying attention to different things. They're paying attention to property appearance. Tim Best, your favorite one is picking up trash around the property. My favorite thing that is my number one thing that I look for is we better not have any cars that look like they've been sitting there for a couple of weeks.
Yeah.
Flat tires or missing bumpers or up on jack stands. That doesn't fly with me. And we put it in our lease that you can give 24-hour notice that you're going to tow cars. And honestly, we've had conversations about that recently, and the car thing for me is paramount because it's a great example of how a property manager goes to the property every single day, and they just get used to seeing the car there. And it's kind of like I like to use they're nose blind to seeing the car sitting there, but I'm not nose blind to it because it's fresh and
No.
I don't go there every single day. What's that? Nose blind to smells. Like you're nose blind to the own smells in your house because you smell them every single day. But it's the same is true when you do anything regularly. When you show up irregularly, you have a different perspective of what you're looking at.
Yeah, I always find the car thing interesting, especially when people say, you're there every day. And I look at it and I go, yeah, so you have a different perspective than I do. I roll up and I see a couple of flat tires and I'm like, has it been like that? Right. Like, because yeah, I mean, guys, let's be honest, there's folks that have cars on the property and they got to go pump them up every day. I mean, that's not unheard of. But you as the property manager, that car hasn't moved in 2 weeks. Right. So there's your flat tires, hasn't moved in 2 weeks. All right, tag it. Right. Like you just go ahead. So I always kind of give a little less leeway on that one. And especially on the trash piece, man. And sorry, I was writing down, I need to go get some more gloves. I usually keep a pack of those, those, rubber gloves or whatever in my car so that I can pick up stuff.
Yeah, that's good. I didn't think, I have a Dodge Ram and I love the Ram boxes. I have like boat stuff in there and
Yeah.
cleaning supplies. I have a couple pickleball balls and I have some golf balls because you never know. But yeah, I didn't think about putting in rubber gloves. I should add that to the Ram box.
Oh man, I got blades. I got a couple of screwdrivers, rubber gloves, usually regular gloves, and a couple other things that are just like over the years. I'm like, yeah, I need to have this when I roll up on a property. But at the end of the day, trash is my pet peeve because it's easy. It's one of the easiest things you can do. Like like the car thing, at least on that one, you got to tag it and you got to wait for the tow company to come up.
Yeah,
And
there's a
like grab it,
process.
right?
Yeah.
Trash, like literally, it's instant. Just pick it up and throw it away. And I'm
Mhm.
like, there's no excuse for it whatsoever. And it just really, really changes the appearance of the property. I rolled up on a property that one of our property managers was like, man, we can't lease anything. I can't get any leases. And I walk in there and I'm like, grass hasn't been cut. There's trash all over the place. If I were a tenant and I had a meeting scheduled with you to look at a unit, I would pull in here and then turn around and leave. I wouldn't even come in the office based off the trash, guys. And lo and behold, I kid you not, more than once, we've recognized something like that, and we've said something to the property manager, and we're like, correct this, and all of a sudden they start getting leases.
Yeah.
Like
The other one
we
is
have.
the office organization, not just even
Oh,
just exterior, but it's like, okay, exterior is step one. Step two is keeping the office clean and organized.
good God, man. So as we do this more, right, we're getting more pet peeves, right? Like Vitaly will tell you, like I've been going around a little bit and walking these offices, and I'm like, man, you got like 6 big gulps from the last 2 weeks sitting on your desk. To throw them away. Like your desk looks like crap. I mean, come on.
Uh,
So
my desk doesn't look fantastic right now.
yeah, but I don't have tenants walking in my office at home trying to lease a unit. So
That's fair. Yeah.
yeah, that's there's that. What you do in the privacy of your home and your home office, I don't care. When the public's coming in
Yeah.
and that's like a representation of your property, then yeah, you need to keep it a little cleaner.
Right.
Um,
Right. Yeah. Tedros says that your property should always be clean. That's the lowest hanging fruit for curb appeal. I agreed.
exactly.
It's the lowest hanging fruit, but I do believe people get nose blind to it because they see it every single day, and it's a never ending battle. So it can be a little defeating. We have actually we've given some like rent credits, like monthly concessions, like for $100 or something like that for some of the residents, to clean up trash around the property. But we check in with the manager and say, hey, how are they doing? They're your employee. If they're not doing the job and it looks dirty outside your window, you stop giving them the concession.
Yeah. Teddy, I really appreciate your comment, and I'm not going to mention who this is. I'm just going to say there was an operator, there was a property management company operator, and they were doing one of those videos where they're walking the property, giving advice or whatever, and he was calling out the mildew on the siding and how you got to keep that clean, blah blah blah. But like right there in his video, there was like an aluminum can on the ground, tissue paper on the ground, and an aluminum can in the bush. And I'm like, really? We're looking at like mildew that needs to be pressure washed, and like you could have just done that in 5 seconds. I'm like, I'd be looking at the trash on the ground first, and then I'll call the pressure washer guy and be like, hey, whenever you can get me on your schedule, let's get out here and get this done.
Yeah.
But yeah, Teddy, I'm with you. That's so easy, man.
Yeah. So Joe says, what steps do you take to hold the property manager accountable when they are neglecting basic duties? So, I mean, I wouldn't even say that I'm most qualified to answer that question, because we have regional managers in place, and regional managers' role is to hold those property managers accountable. The regional manager has a checklist of things that they check when they walk on the property, and we try to get them as close to looking at the property like we do, because they're not there every single day. So, they go there, they check on, the property condition and appearance, they check on, cleanliness, and, they work with the property manager to train them on and set the expectation of what is expected of them. That's really, it's an ongoing battle, and it's something that never really goes away, but you just have to build that into the muscle of what happens every time somebody visits a property.
Yeah.
And before you answer that, when the managers know that you're coming, they're going to make sure that it's cleaned up. So it just kind of reiterates the first thing that we were talking about is good asset management starts with showing up on the property a couple times, once a month, once a week, whatever that looks like for you. If people know that you're going to be coming, they're going to make sure that they're doing their duties and because they're being checked on.
Yeah. So Joe, one of the best things I think that works is when you roll up on the property and you see it, don't get out of your car and start picking up. Go in the office, walk in, and it's like, hey, good morning. Let's take a walk. Let's do a property walk, right? Give them a chance to finish what they're doing, then make them walk the property with you. And while they're walking the property with you, the owner, the asset manager, whatever, you start picking stuff up in front of them, right? They start to get the hint pretty quick. You do that so I'll say this: you do that a couple of times, they start to understand the expectation. You talk to them about the expectation. That pretty much solves itself, because they're either going to do that or they're not. And if they don't, then they're not a good property manager, and you're going to find 10 other reasons to replace them. As simple as that. I mean, that's, again, like we're talking about, if you can't do the easy stuff well, then you're probably not going to do the other stuff well either, and it all solves itself. It's kind of how I feel about it. But yeah, if they start to get the hint real quick, especially if you're the owner. It's like, man, my owner's out here picking up, tissues and wrappers. I need to be doing the same thing.
Yeah. And what's funny is, we've hired a lot of property managers in our time, and they know that investors are, grouped together and they buy these properties. And it's funny how many times we've had property managers come to us and say, I've never had owners so involved as you guys. And, how many times have we interviewed even a regional manager and it's like, I've never met the owner of this place, or property managers, I've never seen these people before. They've owned it for years.
we looked at a portfolio like that earlier this year.
Yeah, that's exactly why I said that.
That one was funny. Nice to meet you. Oh, you guys haven't met? Haven't you been on this thing for like 2 years?
Yeah. It's exactly what I was thinking about when I said that.
Yeah, funny. That was great. That was great. But yeah, man, I forgot I had something I was going to say. I forgot what it was, but never mind.
Can't help you there.
Wasn't important.
So what are some of the other things in terms of what we do on the asset management side of things in order to try to be as proactive as possible. And let me preface that with, we're not perfect. We have a lot of properties, we have a lot of managers, we have a lot of regional managers. We're not perfect, right? We understand what needs to be done and how it needs to be done, but executing it on a day-to-day basis is very difficult because you have to learn to manage through your team and not do the work yourself. And a lot of that takes
Yeah.
time to implement. And sometimes you don't have time, but and that's where you kind of have to step in and help. But understanding, at least at its core, what you should be paying attention to is, I would say, half the battle, right? Because it's I'll be honest, it's a lot easier to talk about it than it is to execute on it.
Hmm.
Especially when you're managing properties that are spread apart, multiple states in a very large geographical area. You have to trust that your team is following, the rules that you put in place, and your regional managers are paying attention and doing the things on your behalf that you want them to do. But that all comes back to leadership, and ultimately leadership is asset management. So I long story long, that's why I wanted to kind of go down that road.
Yeah. Oh, I remember what I was going to say. So, guys, part of asset management, right, and ownership and stuff is like over time. Like Tim was talking about, control what you can control. I also think that starts to play into like um, experience. You start to learn
Mhm.
over time all the things you didn't know you couldn't control that you can't control. One of the ones that's been popping up for us lately, like you mentioned, taxes and insurance. Well, let me ask you this, Tim. So taxes, insurance, right? Like we can't control that. Like what's something over the last couple of years? And guys, I'm literally hitting him out of the blue with this. So if he doesn't answer, we'll give him a pass here. What's something over the last couple of years that you were like, man, I never would have thought I couldn't control that, or that would be an uncontrollable.
It would be an uncontrollable,
Yeah,
something that I thought was controllable, but is not.
sure.
I
Like I
think
said, guys.
payroll costs,
Oh,
because when COVID happened, payroll, like with inflation went up so much, and payroll expectations had to go up in order to keep in line with a living wage. And then when inflation cooled down, it's not like payroll went back down. People don't ask for raises and then give it back when everything goes back to normal. So I thought we could have had a better control over payroll costs, when really we didn't. We can't.
yeah.
The only way to control your payroll costs then is to fire somebody and rehire somebody at a lower cost. I mean, I guess, does that constitute as control? No, I wouldn't think so.
No, because I mean, because here's the thing, like, and guys, full disclosure, we've probably learned this lesson the hard way from time to time. Is like, yeah, you can replace somebody with lower salary, but the fact of the matter is, I mean, the old adage, you get what you pay for. I mean, I don't know where it is any more true sometimes than in that area. Because I mean, quite frankly, the best folks are who are out there, and they know they're good and they're getting paid. Um, yeah, I would agree with you, man. I don't think that one's an easy one to control. Saying hey, this person was making X amount, we're going to go hire somebody for less. I don't know what's the levers you pull in order to get somebody for less, right? I'm going to go for less experience, more junior person over a senior person. That doesn't
Right, right,
that doesn't
right,
tend to improve performance, right?
right. But then your costs are lower. But then it's like, okay, well, my costs are lower, but so is my income. So how much did I
Right.
really lose?
Right, right. Uh,
So Teddy says maintenance costs are thought to be controllable, but if it needs fixed, you need to get it done, and it may cost more in the future to defer it. That's also true.
that's
Yeah.
that's fair. That's fair. And then, Teddy, same thing, man. I mean, we all know that inflation happens. We also know that, just over, time, things go up by a certain amount and stuff. But, to your point, like maintenance cost here in the last little while, and guys, I think we're just entering this phase, quite frankly. So, check me on this in a year and a half. Um, I think maintenance costs are getting ready to accelerate quite a bit. We're really starting to see it. Tim, we got an HVAC quote today that was much higher than we would have expected in the past. We've seen appliance costs go up. I mean, we're seeing cost of materials go up all over the place, guys.
Yeah, the appliance cost was kind of a I mean, what you told me about was it live on this show like a week or 2 weeks
50%.
ago. You're like 50% more. I was like, what are you talking about?
Yeah, about a 32 day gap
Yeah,
from where we had ordered to when we ordered again, and the cost was about 50% more.
yeah, wild.
Yeah. So I'll throw one out there for guys. And I don't
Yeah.
want to go
So
too
my payroll prop. What were you thinking?
for me.
Yeah.
And I'm not going to go too far down this road, but I'm just going to throw it out there. Partnership decisions. I've always kind of thought that, as partners, we're all kind of on the same page, working towards a common goal. We may disagree on how to get there, but that we're going towards that goal.
We
Over the
actually
years, I'm just finding that's not the case.
Tim, we did we have to go back through the archives. We did a show about that like maybe a year or two ago, and it
Yeah.
was everybody's idea of fiduciary to their investors looks a little different.
Oh, but yeah. I mean, I don't know, guys. Maybe I'm just like a black and white kind of thinker. I really don't think I am, but to me, it's like there's only one decision you could make right now that would not be good. Don't make that decision, right? And yeah, it's amazing. But either way, hey Tim, there was something here within the topic. Speaking of that kind of thing, is getting focused, getting too granular with your focus, and losing your long-term view. Right?
Oh yeah. That's we wanted to talk, the kind of the analogy of like why asset management is so relative to underwriting is because it's a long-term vision instead of a short-term vision. And even to Teddy's point with the maintenance costs, it could cost you more to defer it. And it's kind of like a ripping the Band-Aid scenario off. It's, do I need to rip the Band-Aid off now and and have it bite the bullet now, right, in order to prevent the bomb from later? Or do I just stick my head in the sand and I wait for the bomb for later just because it solves my problem right now? Long-term vision. Real estate is a long-term game. I think actually, I know a lot of investors are still conditioned to believe that you can flip in and out of a property like it's 2018, 2019 through 2022 and just make buku bucks. And real estate at its core was always a 10-year horizon, I would say. And a lot of our deals were shorter time frames than that. But you get into a deal and people are like, nah, I just want my money back. Well, sorry, that's not what you signed up for.
Right. Right.
And we're making decisions as asset managers and operators of how is this going to impact us, 7 to 10 years from now, rather than affecting us today. And I personally believe that some people make decisions based on the optics of a good quarter versus the optics of a really good deal or a good year. And I much prefer for a good year rather than a good quarter.
Right. And what's interesting, man, is one of my aha moments with exactly what you're talking about right there is when Hurricane Helene happened in South Carolina. And we didn't have a good quarter when that happened, right? Like our CapEx costs that month or that quarter were out of control, right? I mean, quite frankly, they were high for lots of reasons, right? Most of which is a damn hurricane came through and knocked trees down on our buildings and messed stuff up, and we had to fix that. And literally when those quarterly financials went out, like we had multiple guys reaching out to us and like, oh my God, look at this. What happened? These costs are out of control. It's like, guys, it was hurricane season. It was a 500-year storm. And this happened. It happened,
Mm-hmm.
and it was just, but we literally had like a couple of folks like, I want my money back. It's like, really? Like it's cash flowing. It's cash flowing outside of, I don't know, a 500-year storm, but you want your money back. It's like, it was like Tim's talking about. It's like you're caught in that moment and you're missing the fact that like, hey, this is a long-term horizon. This was an 8-year hold. This was a 10-year hold. This was a 5-year hold, whatever it was. And you're caught up in, something that happened over 3 days.
My favorite thing about real estate is it almost protects it almost protects people from short-sighted quick decisions because it's so illiquid.
Yeah.
Right. It almost protects you from, hitting the sell button on your stock market portfolio because it's red and you think it's going to go down further. So I'm going to mitigate my downside losses. Like, it's not that easy to sell a real estate deal. So therefore, if it's a long-term horizon and you can't sell it quickly, you have to be, Tim and I we're looking at deals that we know we're going to try to, the debt expires 8 months from now or a year from now. And we're already talking about, what are we going to do? We're going to sell it. We're going to refinance it. What are those estimates? Like, what do we need to do to get there? It's not something that we can just say, this week I feel like selling a property. Let's go put it up for sale. No, it takes a lot of commitment and asset management and forward thinking to prepare yourself to be able to sell a real estate deal. And generally, with your principal pay down over time and values appreciating because of inflation and rising rents and all that other kind of stuff, you generally are pretty secure in making money. Now, how much money you make is subjective and can be opportunistic. It depends on the market, depends on when you bought it, depends on what you paid for it, depends on how much you spent on it, depends on how well you ran it. There's a lot of different variables that go into that success factor, but I think all can agree that even if you're making some kind of money, is better than making no money at all. And one thing I personally hate is when an investor will be like, well, I should have just put the money in a stock market. Well, I'm like, well, you could have done a lot of things in hindsight, but in the moment we made the decision based on XYZ factors. We achieved XYZ factors. And I'm sorry that the return wasn't as high as we thought it was going to be because of these XYZ factors, but we didn't lose money, right? And that's the whole point of portfolio diversity. And even, when we're raising money on deals and we're talking to different investors, I tell them, don't put all your money into one deal. Like, if you got a couple $1 million if you got $500,000 to invest, I would much prefer you see you put $500,000 investments down instead of one $500,000 investment down, because remember, it's like a stock portfolio, and you got to make sure that you're mitigating your risk in different markets and at different asset types. Not every deal is guaranteed to be a winner and make a lot of money, right? Some will hit and you'll have a couple home runs or triples or doubles. Some will be base hits, and some will be bunts that you get thrown out at first, right? You're not going to move the needle a whole lot on some things, but if you didn't take the risk and try, then you were never even, the possibility of making anything was always zero.
Yeah. By the way, if you guys aren't watching and paying attention to the comments, Teddy's got some pretty good stuff going on here in the comments. And Teddy, I like what you're talking about, because when we were, again, not naming names, but when we were on third-party property management, like, one of our biggest frustration points as owners was like property management companies that would charge us on the rent roll, the rent charged, not rent collected or things like that. So, like you're talking about, that is clearly an example of where there's the property management and the ownership are not aligned, right? Their goals are not the same. Because clearly, as a owner and an asset manager, I care about what comes into the bank. I don't care what you're actually showing that you charge the tenant, right? So that's a really good point. And guys, you should pay attention to Teddy. In fact, Teddy, I'm curious about your base fee and a success fee. Would love to hear about that. So,
yeah.
But what did we forget? Anything?
I think that kind of covers everything that I think we wanted to talk about. So,
okay.
Unless there's something you got a burning desire to get to say.
No. I got a burning desire to say a lot of shit, but I don't think it's appropriate for this forum. So
yeah. So, all right, guys. Well, thanks again for joining. I appreciate everyone engaging and providing feedback in the comments. Hope you learned something. Hope you have provided different feedback and maybe implementing something in your own business. So we'll be back next Tuesday at 10 a.m. Eastern time. Until then, we'll see you then. Peace.
All right. See you guys.